and China, remember, had those talks that began late last week and continued over the weekend in Alaska with representatives of each administration. And it seemed as though agricultural purchases were not on the table, but certainly that is something that has been an issue between the two nations in the past. Let's talk about the implications of that for the U.S. farm industry, both farmers themselves and equipment suppliers. Kristen Owen is joining us now. She's Oppenheimer Executive Director of Sustainable Growth and Resource Optimization. Kristen, thank you for being here. So when we're talking about not these talks, but maybe future talks, what do you think is most important for U.S. farmers and farm suppliers in terms of this relationship? What needs to maybe get opened back up again, or what needs to change?
Certainly. And thanks for having me. Market access through trade really is a critical piece to the farm economy. And so the impact of the trade wars under the prior administration caused a lot of uncertainty for farmers. Now, as you mentioned, agricultural purchases were not a key topic of the agenda last week in Alaska. And so what we're really spending time trying to understand are what are the fundamental drivers for demand that will continue to support China purchases outside of these phase one agreements. And so that really comes from rebuilding the hog population in China, which was decimated in the African swine fever outbreak 2018, 2019. You've also got the potential for a nationwide ethanol mandate on the table. And these are things that structurally continue to support grain purchases to China, primarily from the United States.
And, Kristen, we're also in the middle of an economic recovery here. And I'm curious, just thinking about the ag space more generally, how pro-cyclical it is and sort of how much of a tailwind it is now enjoying or set to enjoy as we, really start to see a reinvigoration of the global economy.
Yeah, certainly. It's a great time to have this discussion around the commodities cycle because it is aligning with that replacement cycle that we're seeing in the ag equipment space. Following the 2012, 2013 super cycle, you've really sort of seen this dearth in agricultural equipment purchases over the last 7 to 8 years. And as we are thinking about sort of the proliferation of technology in this end market, you've really got a nice setup in the backdrop of better fundamentals, this replacement cycle, and the opportunity to produce more with fewer inputs enabled through technology.
Kristen, what's some of the most game-changing ag tech you're seeing in the market this year, and who's working on it?
Yeah, so we're very excited with Deere's launch of its See and Spray system on their sprayers. That will be on the 2022 lineup. And this is really the first application of commercialized machine learning and artificial intelligence that we're seeing in the ag equipment manufacturers. And what's important to note about this technology is that using machine learning can identify a weed from crop in the field and spray pesticides only on that weed. So that's going to improve the yield by protecting your crop better, but it also reduces the amount of chemicals that you're spraying in the field. That helps the farmer's bottom line, but it's also better for the environment and reduces the amount of chemicals that you're putting into your soil. And so we really think that this puts Deere in that pole position in terms of technology adoption.
Kristen, when we talk about some of these disruptive technologies in other industries, right, we tend to talk about startups that are doing this kind of stuff. When it comes to ag tech, is that same kind of phenomenon happening? Or are we having some of the larger farm equipment companies buy some of those startups? Or what's the dynamic like there?
Yeah, so one of the unique aspects of the agricultural sector is that it's got long lead times. You've basically got to prove out your technology in the matter of one farming season. And it's hyper local. You've got, unique characteristics for each part of the country where you're growing. And so we are seeing a proliferation of these startups that are trying to solve these really challenging problems. But doing so at scale is going to require a fortified balance sheet. And so we think M&A plays an important role in the growth trajectory for these major ag equipment manufacturers, the Deere, AGCO, CNH. We've seen each of them advance their technology portfolios through M&A over the last 2 to 3 years. We think that that continues. At the same time, you've got this SPAC capital now that has a little bit longer time horizon, and so they can adjust to sort of that longer cycle time. And more than half of these SPACs have an ESG mandate, and AgTech screens really well against some of those ESG commitments.
Very interesting. Kristen, finally, I'm curious about cost of some of this new tech. You know, the spray technology that you were talking about for deer, and given where we are in the cycle, as Miles was alluding to, what's the bandwidth of the farmers or farming companies, because we're talking about also big organizations in some cases, big cooperatives. How expensive is this stuff, and are they able to buy it right now?
Yeah, it's a great point. And I will tell you, technology can't just be for technology's sake in this industry for that reason. When you've got producers capturing 7 to 8 cents of the dollar of the value that you're seeing at the retail level, you've got to have an ROI on this equipment. And so what we're seeing is most of this technology is targeting an ROI in the single year. And given what we're expecting in terms of net farm income, we do see that there's some headroom for additional technology adoption as long as it can prove itself either on the top line with yield or on the bottom line in terms of reducing inputs.
Yeah, those are some really low margins. So I can imagine that cost is a big issue. Kristen Owen, thank you so much for being our Oppenheimer Executive Director of Sustainable Growth and Resource Optimization. Appreciate it.